Hey everyone, welcome back to the channel where we make sense of the stock market without all the jargon. Today, we're diving into one of the biggest names out there, PepsiCo. You might think PepsiCo is just soda, but they've got their hands in everything from snacks to sports drinks, and they're a global powerhouse. Today, we'll break down their Q3 earnings, what they mean for PepsiCo, and more importantly, what they mean for your portfolio. So, grab your favorite snack and let's get started. All right, so let's get into it. How did PepsiCo actually do in the third quarter of 2024? Well, drumroll please. They saw a 1.3% organic revenue growth. Now, I know what you're thinking. 1.3 cent? That doesn't sound like much. And compared to last year's 9, which was huge, this feels a little meh. But there's a reason for that. First, they had some trouble with product recalls at their Quaker Foods division. Yeah, the oatmeal and cereal guys that took a bite out of their growth. And then you've got these pesky geopolitical tensions happening in their international markets. But despite all that, they still grew. And that's impressive. Earnings per share, or EPS, is basically how much profit each share of Pepsi stock earned. Their core EPS, which filters out one-time costs, came in at $2.31. That's a 5% increase from last year. So even with some hiccups, they're keeping their profits steady. In simple terms, they're still making money, folks. Now, PepsiCo's got their hands in a lot of pies, or chips, or sodas, you get the idea. Let's break down how their key divisions are doing. First up, Frito-Lay North America. You'd think chips would be flying off the shelves, right? Well, not quite this quarter. Sales were actually down 1%, and their profits dipped by 9%. Why? Well, inflation's making everything more expensive, and people are being a little more cautious with their snack spending. But PepsiCo isn't too worried. They've been investing in their Lay's brand. Ever had those limited-time flavors? And they're betting big on making snacks more affordable and accessible again. The beverages division had a much better quarter. Their sales grew by 1% and their profits were up by 7%. How did they do it? Big names like Gatorade and Pepsi Zero Sugar have been crushing it, and they're focusing on drinks that hydrate and offer functional benefits. Think things like Propel and Bubbly. Oh, and fun fact, Pepsi Zero Sugar had double-digit growth this quarter. People are loving that no-sugar life. Now, Quaker Foods North America, oh boy, these guys had a rough quarter. Sales dropped by a whopping 13%, mostly because of some major product recalls. If you've ever had to return a box of cereal, you know the pain. But PepsiCo's working hard to turn things around, and they expect things to improve soon. So to sum it up for North America, snacks are taking a hit, drinks are saving the day, and oatmeal, well, it's a work in progress. Despite all the craziness happening globally, like geopolitical tensions, PepsiCo still managed to deliver 4% organic revenue growth internationally this quarter. And get this, they've been crushing it in places like India, Egypt, Turkey, and Poland, all seeing double-digit growth. That's huge. Basically, while North America is sipping their soda slower, PepsiCo's markets overseas are chugging along. Why? Well, they've been focusing on what people in different regions really want: more flavor variety and product sizes that fit local needs. In other words, they're making PepsiCo feel local, no matter where you are. And here's something that might surprise you. About 40% of PepsiCo's total revenue comes from outside the US. So if you're thinking of investing, don't just look at what's happening here. PepsiCo's got a whole world of customers keeping them afloat. Now let's talk about something we're all feeling: inflation. You've probably noticed things getting more expensive at the grocery store, and that's not just for us. PepsiCo's feeling it too. Higher costs for ingredients, packaging, and even shipping means PepsiCo has to get creative to stay profitable. So what's happening? Well, consumers are being more careful with their money, especially when it comes to snacks. I mean, we all love a good bag of chips, but inflation means we're thinking twice before throwing extras into the cart. This cautious spending hit PepsiCo's snack sales in the US pretty hard, especially for Frito-Lay. But PepsiCo isn't just sitting back and letting this happen. They're doubling down on value. Things like offering smaller packages that are easier on the wallet and investing in their brands to keep them front and center. Plus, they're pouring money into productivity. Think automation and tech upgrades to cut down on costs and keep prices in check for customers. So yeah, Inflation's hitting us all, but PepsiCo's playing the long game. They're making the right moves to stay competitive, even when things get tight. If you're enjoying the video, hit that like button and subscribe to get more easy-to-understand stock updates. Back to the long game. Let's talk about PepsiCo's secret weapon, productivity and cost control. It's not the sexiest topic, but trust me, this is where PepsiCo is really flexing. PepsiCo has been rolling out some major productivity initiatives to cut costs and keep profits flowing. Think automation, fancy machines taking over a lot of the heavy lifting in their plants, and digitalization. Yep, they're using tech to streamline everything from warehousing to transportation. This is all about getting their products to us faster and cheaper, and it's working. And let's be real, they have to be this sharp. The cost of doing business, whether it's raw materials or getting stuff from point A to point B, isn't getting any cheaper. But by staying on top of these efficiency plays, PepsiCo's been able to expand their operating margin by 75 basis points in Q3. I know, that sounds technical, but basically, it means they're getting more profit out of every dollar they spend. Oh, and another fun fact. They've also ramped up spending on advertising and marketing, because what good is making the product if no one knows about it, right? They're making sure their products stay front and center, whether you're shopping in store or online. At the end of the day, PepsiCo's not just reacting to the market, they're planning ahead, cutting waste, and keeping their edge sharp so they can keep delivering those sweet, sweet profits. All right, so what's next for PepsiCo? What can we expect for the rest of 2024? Let's dive into their updated outlook because there's some interesting stuff here. PepsiCo's being pretty clear. They're adjusting their expectations for the year. Originally, they were aiming for about 4% organic revenue growth, but they've dialed that down to a low single-digit increase. Why? Well, remember all that inflation and those geopolitical challenges we talked about? Yeah, that's playing a role. But despite the tough environment, PepsiCo is still sticking to their guns with an ambitious target, at least 8% growth in core constant currency EPS for the year. In plain English, they expect to keep their profits growing even if sales slow down a bit. And that's where PepsiCo's real strength comes in. They've built a solid foundation with cost controls and productivity that will keep those profits flowing. And for all the investors out there, get this. PepsiCo is planning to return $8 billion to shareholders through $7 billion in dividends and $1 billion in share repurchases. So, if you're holding on to PepsiCo stock, that's some serious cash coming your way. Bottom line, PepsiCo's future looks steady, and they've got a solid game plan to navigate the challenges ahead. You can expect them to stay strong, especially if you're in it for the long haul. Okay, let's break it down. What does all this mean for you as an investor? On the opportunities side, PepsiCo has a ton going for it. They're a global player with a diverse portfolio, everything from chips to energy drinks, and they're growing fast in international markets. They've also got a strong productivity game, which means they can keep cutting costs and boosting profits, even when the economy's a little shaky. Their beverages and international divisions are killing it right now, and that's a huge plus for the long term. Plus, they're paying out solid dividends and buying back shares. So, if you're in it for passive income or long-term growth, PepsiCo is definitely a solid bet. Now, let's not ignore the challenges. Inflation is making everything more expensive, and consumers, especially in North America, are feeling the pinch. That means slower snack sales, and PepsiCo's had to lower its revenue expectations for the year. Plus, global instability and those pesky product recalls can throw a wrench in their plans. But here's the deal. PepsiCo is built for the long game. They've faced challenges before, and they've come out stronger. So if you're thinking about investing or holding on to those Pepsi shares, remember, this company has a history of bouncing back and delivering value over time. All right, let's wrap this up. Here's the quick recap of PepsiCo's Q3 2024 performance and what it means for you. First, PepsiCo's still growing, but at a slower pace than last year, thanks to things like inflation and product recalls. But don't sleep on them. They've got their costs under control, and their beverage and international markets are strong. Second, they're focused on productivity and automation to keep profits rising, even if revenues are a bit slower. They're playing the long game, and that's a good thing for investors. And finally, if you're looking for steady returns, PepsiCo's got you covered with strong dividends and share buybacks planned for 2024. So whether you're new to investing or you've been in the game for a while, PepsiCo's a stock you'll want to keep on your radar. That's it for today's breakdown. And for the question of the day, drop a comment below. What do you think of PepsiCo's future? Are you holding, buying, or passing? I'd love to hear your thoughts. Thanks for watching, and I'll see you in the next one.